let's go through our valuation model. So let's start with the CAP parameters that drives our discount rates. Using our current market conditions, these fuels pulls data from this Federal Reserve Bank, or known as Fed. So this is where it's getting the risk percent and some of the terminal growth rate as well. And however, the beta for this one is at 0.7, and I'm going to be using a 5-year projection. So let's enable economic cycle analysis, which basically, as I mentioned, uses data from Federal Reserve Bank. And another thing we're going to be looking at or enabling is behavior financial analysts. So these are some of the assumptions that I believe to be true. So for low case, we're going to assume low case, which is in this case bear case scenario. We're going to assume increased regulatory pressure, slow cash to card migration, and stablecoin disruption impacting growth. This leads to lower margin growth, profit margin, free cash flow, and a few other metrics. And mid case RB, our base case scenario, where I believe most likely scenario, steady execution per management's guidance. And I believe if everything stays the same, then these are the normal case. In our bull case scenario, we're gonna assume the accelerated growth, digital payment adoption, successful expansion of value-added services, and continued operating leverages. So these are some of the bull case scenarios. And after I run our valuation model, so you can see that if you believe in the low assumptions, then the stock is worth around $226, and if you believe in high, then it's worth $119. And from our mid scenario case, it's worth $229. And if you're looking at PE valuation range, then it's worth $249 or $349 for high. And these are just honestly my assumptions based on my research. And what's crucial to understand that even in bear case, Visa isn't cheap, and it still is quite expensive. So look through our growth rate and discount rate. It is still significantly needs to come down 33%, which is quite a lot. And if you're looking at a growth rate of 18 and discount rate of 8.5, then it is at fair value, and that goes for 13.2% as well. So I believe overall, and these are just data that I pulled from Federal Reserves. And this is also model that I created, which is called behavioral analysis model. These are the assumptions that I made. Based on that, it tells me that my assumptions appears to be optimistic relative to historical and peer benchmark. And I'm being very overly confident. So it doesn't look good because it needs to fairly come down. I believe it